Good evening. Welcome back to another episode of the Booty Evening Show. Today I will be covering my 5 favorite long-term stocks to hold. As you guys may have noticed, we are in a correction period right now with the major pullback on QQQ as well as SPY and growth stock. So what happened when we have a correction or a pullback? These normally leads to buying opportunities. It's like having a sale, like a Black Friday sale. Everybody wants that dip. But when that dip happens, everybody's scared to buy. It's like you've been waiting for this moment. When the moment happens, you chicken out. So every time there's a dip, I start buying into my favorite long-term stocks. And today we'll be talking about those 5 stocks. I actually bought in a little bit of position already on all of these stocks on Friday at the drop. And they are already up nicely. So, if the market happens to drop some more, then I'm going to buy in some more. So the most important thing is always have some cash. You don't want to have all your money invested. So whenever there's a dip, you got to be ready. Every time there's a market crash, you got to be ready. You have that cash ready to buy the sell. So the first stock we'll be going over is Snapchat. Snapchat here is actually dropped 30% from the high to the low right now, and we got in around 52.80 on Friday here. So it was a nice dip buy. We bounced right off of trend line as well as the 100 EMA. So here, take a look at Snapchat here. The revenue is growing steadily every quarter, and it's actually getting exponentially bigger right now as well. So one thing that you got to know about Snapchat is it is my favorite stock, and it's the first social media stock since Facebook to make money. This is second quarter in a row that they have made money here on the EPS. So Snapchat with how the management turned things around, it is a buy for the long term. I see this thing growing and pumping all the way to $100 by the end of the year. So I love Snapchat. It's a great long term hold. It's my biggest position. All right, the second stock we'll be looking at will be Shopify. So Shopify here is an e-commerce company. They are the competitor for Amazon basically, except they deal more with small to medium companies, which is, Amazon is leaving those out. So Shopify is getting all those market share there, and they're only getting bigger and bigger and bigger by the day. So this is my second favorite stock here. They have a lot of room to grow here. Let's see how much down. So Shopify here dropped a good 30% from the high as well. It's basically 30% off. And we bounced right off the 200 EMA here. There's a nice bounce here. I also loaded up on some Shopify as well. We got in around 1065 on this pump here. But we need to see confirmation. We need to see Shopify close above 1150 for a full reversal. But Shopify is very bullish, and I love getting this for the long term. So let's take a look at some numbers for Shopify here. As you guys can see, same thing with Snapchat as Shopify. We are in a constant growth here. As you guys can see, for the last 5 years, every quarter Shopify has been growing bigger and bigger every quarter. They're making more money, and the revenue is getting higher. So look at this jump here. I mean, they made from October 2019, they made 13 cents to 47 cents, back to 19 cents, and then the quarter after that, $1 for every shares, and now we're at $1.60 for every shares. So Shopify, I love this for the long term. They are the only company that can compete with Amazon in e-commerce, and I think they will be getting bigger and bigger by the day. Third stock we'll be looking at will be Spotify. So Spotify here is a growth company that I like a lot. Mainly it's more speculative growth though. But one thing that you have to consider is whenever you're listening to music, there's Apple Music, and then there's Spotify. You don't hear anything else from anyone. Spotify is the dominant one. Even Apple Music's not even that big compared to Spotify. But the biggest thing about Spotify that I love is how much they're pushing in on podcasts. Podcasts is getting very, very big. Even Amazon knows about this, and they started investing into podcasts as well. But Spotify is going to be the leader in podcasts, and podcasts will be very, very big in the near future. They signed deal with Joe Rogan, Obama, Kim Kardashian. There's all these big celebrity names they're bringing in for for the long-term growth there. So Spotify here, let's take a look at the numbers. They are in a constant growth as well, but the growth has not been that tremendous yet. But I expect these numbers to jump a lot with all these new signing that they just did. Bring in Joe Rogan, Kim Kardashian, and whatnot. The one thing about them is they have not really made, consistent money yet. But this is because they are focusing on growth and they're investing, all the money back in to try to get this bigger, which is what you want to see in a growth company. So Spotify is one of my favorite as well. Let's see how so this thing dropped also 30% from the high basically, and we did get a jump of bounce right off a major support as well as the 200 EMA. So we got to see if this thing can hold this area. If 200 EMA can hold, I mean, we can see a lot more upside to this. Fourth stock we'll be looking at will be Uber. So whenever you think of, whenever you need a ride, or if even for, food delivery, you always say Uber Eats or I'm a Uber. You don't say Lyft, I'm a Lyft, or I'm a DoorDash. So that's already name recognition that Uber gets the most. This is why I love Uber for the long term, because they have so much growth. Not only are they solidifying their position in the food delivery service, and the Uber ride service, but they are also getting into Uber Freight, which is basically 18-wheelers loaned out to different companies to transport products. So Uber is going to be very, very big. I think this is one of the biggest growth company. So we added shares of Uber as well, around $52 here. That's because Uber bounced right off of the 200 EMA as well as a trend line support here. So let's take a look at Uber's number. So Uber's actually been kind of stagnating on their growth right now on the revenue wise, but that is because they got hit by Corona. They were actually forecast to make money by the end of this previous year, but Corona hit, so that kind of pushes back. So right now they are losing 54 cents a share. But once this number becomes positive, and Uber's like, hey, we finally made some money, this stock will be doubling. That's how much value Uber has. It is a bit overvalued, as almost every stock in the market right now, but the growth potential is so big for Uber that I love it. And I see this thing hitting $100 in in the short by the end of this year or mid of next year, because they should be making money by the end of the year. The last stock we'll be looking at will be FCEL. So FCEL here is a highly speculative company basically. So FCEL is the highest risk out of all of them. So for FCEL, we're playing for the growth, but we're playing for what to come, the potential of hydrogen cell. So FCEL is a hydrogen cell company. They produce hydrogen batteries and whatnot to so this is one of the stock that's clean energy and great under the Biden administration. So FCEL here, we've been in this thing since $2. We've been in and out of it, and it hit a high of $30. This thing actually dropped a tremendous 60% from the high. So you are getting this thing 60% off, which I think the risk to reward here is great. I want to see this thing hold above $13.50, but we did add some shares here as well around the $12. Right the bounce off of the previous high, as well as trying to secure above this 100 EMA. So right now FCEL is very oversold, down 60% from the high. The growth potential is definitely there, but this one you would have to be patient, and you have to have high risk tolerance for something like this. So if you're an FCEL, if you want to take FCEL, this is very speculative company. As you guys can see, the growth has not been showing much revenue growth at all, but they're losing less and less money. They're about to be profitable very soon here. But FCEL is the highest risk out of all these stocks. They are a hydrogen cell company and have a lot of growth potential. So these sums up my favorite 5 stocks to own for the long term. That's Snapchat, Shopify, Spotify, Uber, and FCEL. If you have any questions on this, feel free to leave a comment, and please subscribe and like. And I hope you guys have a great week next week. Trade less and make more. So with that, I'll see you guys on the next episode of the Booty Evening Show.